Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and TradingView with over 190k reputation points. In this video, I will be speaking about Euro USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds and the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical monthly support and demand area. From here, in fact, all these previous rejections to the upside were created. So every time the market tested its zone, it got rejected to the upside quite aggressively. And what we can notice is that at the moment the market is testing again the exact same zone, and there's a good probability to see a potential rejection to the upside being created away from this historical monthly support and demand area to the upside, as already happened in the past every time that the market was testing this exact same zone. So from a monthly standpoint, everything seems quite bullish, with the market being testing right now the liquidity inside of this historical support area. Let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, what we can notice is that at the moment the market is testing exactly the previous low. Now, from here, the previous push to the upside started, and at the moment the market is testing the exact same area. Now, what this means is that there is the possibility from here to see once again the rejection to the upside, and essentially for the market to create this double bottom at this area. So if the market will respect this previous support as support, there is a good probability for a double bottom to be created at this level, which, as we have already seen, is exactly that monthly support and demand that we have just identified. So we would have a double bottom on the weekly inside of a monthly demand and support zone. Now, let's keep all of this in mind and drop down on the daily time frame. Now, from a daily perspective, the structure is quite clear. We have a market which has very strong previous daily support turn resistance at this area. In fact, this zone was acting as previous daily support from which this push to the upside was created. Then the market broke below the area, and all that previous support was turned resistance here and respected again as resistance here. Now, this area is also the level at which the market has now created a lower high, because when you have a downtrend, you essentially expect the market to create a series of lower lows and lower highs. In order to have a break and shift from a bearish trend to a bullish trend, the market would need to shift from creating lower lows and lower highs to creating higher highs and higher lows. Therefore, only if the market would manage to break above this zone, we would have both the break of the previous resistance, which at that point would become support, and a shift from a bearish daily essentially trend to a bullish daily trend. So from the creation of lower lows and lower highs to the creation of higher highs and higher lows, because this would be the break above the previous lower high. Now, when you have such a level of structure, as we know in the market, which was respected previously as support, then the market breaks below it, it starts acting as resistance. If the market then breaks back above, at that point, what you would naturally expect is for the market to go and test that zone and then reject to the upside. That is how most of the times the market plays this out. So in a situation like this, if the market would manage to break above the level, that is where things would get very interesting, because at that point, this previous resistance would become support. So if the market would break above the level after a break on the retest of the previous resistance turns support, that is where there will be quite good probability to seeing more institutional longing, which at that point could further increase the probabilities of seeing a potential rejection to the upside away from this level. Now, speaking about institutional longing, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data precisely for the euro, the first thing that we have to keep in mind is that if we're looking at the euro, we're actually already looking at euro USD, because all currencies on the spot are traded against the USD. And we can notice how with the very last few reports, net positions have once again started increasing. We went from minus 75k to minus 68k net positions. So slowly, institutions are starting to move once again back to the bullish side for the euro. And we can notice how institutions have also, in fact, started decreasing their shorts, going from 232k to 227k. So Euro USD is looking quite strong. So in a situation like this, if we will have this break and retest, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, all these general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg, because if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website, which you find also linked in description. Here, you will have the possibility to gain access to all my courses. So really complete courses that will guide you from the very basics of charting all the way up to more advanced concepts like building algorithmic trading strategies using quantitative finance tools like the quant analyzer to build portfolios of strategies, and a lot of really important and really interesting things that you need to know if you want to become a better trader. So this is something you really cannot afford to miss. You also have the possibility to gain access to the trading station software with the Telegram notifications integration, one-on-one mentoring directly with me, the COT data software that you often see me use on the YouTube channel, and you also have the possibility to integrate with gaining access to all my EAs, so my personal EAs, the ones that I have developed and that I trade on my own account, and also to have access to the trading show, which is essentially a live stream of all trades coming from my account directly on the Telegram channel as they are executed and managed. Here on the website, you will see that there is the complete presentation of all the EAs that I personally run. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. And there is also per time slot this special discount. So at the moment, there are 10 days before the next price increase. So I would really suggest that you go and check it out as soon as possible. The link is in description, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.